Good morning. It's Thursday, the 19th of October. Good morning, Stuart.
Good morning.
It's time for a weekly webinar, although weekly, we weren't there last week, but for good reason. But we're back this week with some good news, actually, for the people that have been following us for a long time. You might have seen this morning that Weebit announced its second customer, long-awaited second customer. And we'll talk about that, and also Whitehaven Coal, a lot happening in that space. But we'll kick it off with Weebit because it's a pretty big announcement. And it's an announcement that a lot of people have been waiting for a long time. So basically, the company just signed its second Foundry partner. And the company initially said a while back that they expected this to happen sort of in the middle of 2023. Of course, we're well past that. But finally, they announced it. And I think it's further validation to the Weebit story because, as you might know, they've got Skywater already as a partner. This is the second one, and we'll go into who this is and how big they are. But I think it's just really good news that that they signed this one, and share price is responding positively, obviously, in this depressed market, which is good news. So just let's have a look at who they signed. So Hightech in Korea is the Weebit's second partner. It's the number 2 foundry after Samsung in Korea. It's running 2 fabs with 1.7 million 8-inch wafers per year, which is okay. It's not massive. If you compare that to TSMC, for instance, they run, I think, around 15 million wafers a year, but that's a 12-inch equivalent. So that's capacity is about 30% higher than 8-inch wafer. So it's nowhere near TSMC, but it's still a top 10 foundry in the bigger scheme of things. It's not the most advanced ones, but it's so as an example, TSMC manufactures well below 10 nanometers down to 2 and 3 actually. This one, Hightech is manufacturing most advanced node they have is 90 nanometers. But that goes all the way up to 180. But that's basically their bread and butter. And I think purely looking at that, at those nodes, it makes the perfect partner for Weebit because they're qualified already at Skywater at 130 nanometers. So it should be fairly straightforward to get qualified at this new partner as well.
So, Mark, the lower the nanometers, the more sophisticated the chip.
That's correct. Yeah. So. But so the more sophisticated chips, so the most advanced chips are used in the high-end mobile phones, for instance, as an example, right? Or in artificial intelligence chips. But the older nodes, the bigger, basically the circuitry of the chip is what we're talking about here. So 90 nanometers, 130, 180. There's a lot of fabs in the world still manufacturing at those nodes, and this is for products that don't necessarily have to be really small. Right, so there's a big market for that out there. Let's, as an example, a power management chip for, I don't know, a vacuum cleaner or a fridge or something that's battery operated. It doesn't have to be, most of the time, it doesn't have to be really, really small. So that's where these foundries come in. So big markets for these guys, and they've got, of course, we'll be writing an update on this, research update with Pitt Street Research, but they've got very well-known customers on their books. Revenues in 2022, 1.24 billion. And like I said, this is a big play on power management chips that are used in all sorts of devices, including battery-powered devices or devices where you need to switch between a battery and a wall outlet, an external power point, basically. And so as Weebit announced today, these are manufactured using BiCMOS processes. And this is basically Hightech's bread and butter, right? So this is core business for them. So this is a slide that Weebit showed a couple of times, and this is the top 10 on the left, the top 10 foundries in the world. So these are manufacturers that manufacture chips for third parties. Hightech is number 10 right there. So it's a top 10 player. But as the company Weebit has told many times, they're talking to a lot of players on both of these two lists, right? So on the left, the foundries, they're talking to most of the top 10 players there. So let's exclude the Chinese ones. You've got about 7 left, so they're talking to all of those. And then also they're talking to the integrated device manufacturers. So these are companies that design the chips, manufacture themselves, and also sell them themselves, right? So the best example, Samsung, Intel, these are really big companies as well, and so we is hoping to sign a bunch of these companies as well in the next little while. So that's DB Hightech, number 10 on the Foundry list. So what should we expect? Initially, there will be a license fee, either at the start of the engagement, which is right about now, or at the qualification of the chips. So Weebit's IP stack will go to, in the technology transfer, will go to the new partner. They will design it into products that they want to get into, that they want to design it into. Once those initial wafers have been produced, they will be qualified to see if everything works. And once that is confirmed, at that point, there could be a license fee payment as well. So it depends a little bit on the structure of the contract. Obviously, we don't know that, but it's fair to say that revenue should be flowing from this, purely based on this deal, either very soon or once that qualification is done. There will likely also be non-recurring engineering fees to help this new partner and its customers to design and integrate the IP stack into their products. And this is the big payoff, obviously, once these chips go into mass production, that's when the royalties start to flow. So this will be a percentage based on the exact sort of IP in the total chip that the company that DB Hightech will be selling. So percentage of the sales price, and usually it's 1 to 3%. Sometimes it's a bit higher actually, sometimes 5%, and I've seen cases where it can be as high as 10%. But probably likely for this one, embedded memory will be something in that range of 1 to 3%. But that is still away, some time away. So this morning, share price responded positively. It was up about 12%, and we can do just a quick check. Yeah, it's up sort of 12.5, 13%, which is okay. It's not massive, and hopefully we can see a bit more of a response either later today or in the next coming weeks, because obviously it's good news. There's still a big big chunk of the shares that have been sold short, around 6.6% per the 12th of October, which is about 12 million shares. And hopefully, and we don't know if this is going to happen, but hopefully, on the back of this sort of good news, we can see some of those shorters maybe squeezed out. Hopefully, buying back at higher prices. But yeah, you never know how that plays out, what the balance is in the market in terms of supply and demand for these shares. But one thing that we can say for now anyway is that Weebit has bounced off the roughly $3 support line. And we flagged that support line a little while ago in one of our webinars. We've seen that now. A bunch of gaps have been closed as well. So hopefully from this level, and you can see it in the chart on the right, it's consolidated a little bit and jumped off that $3 mark. And again, hopefully we can see some further share price gains going forward. All right, what else is to come in 2023? Well, like I said, the initial revenues from Skywater and or the new partner could come in. So license fees, non-recurring engineering fees. Hopefully, and this is something that Kobe Hannock, the CEO, flagged with us a little while ago. Hopefully, we can see more deals before the year is out, either a Foundry and or an IDM. Hopefully, it's both. We'll see. We'll see what happens in the next few months. Our valuation for the stock is unchanged. It's 950 based on what we've seen with other embedded ReRAM players, and so we'll update our research as well. But I think that valuation is still something that we're quite happy with. So you can check out all the research that we've done on Weebit to date on Pitt Street Research. So the website is right there, pittstreetresearch.com, and we'll try to talk to Kobe today actually to see if we can get some comments from him. And we'll publish that. Obviously, we'll publish that on the Stocks and Under and the Pitt Street Research website, because there's probably some more color that he can provide for us. As a disclaimer, obviously, people that have been following us, or disclosure, I should say, both Stuart and I own stock in Weebit Nano, so we like to see the stock do well going forward. So they have it. It's good news today for Weebit, and hopefully there's more to come this year. And with that, we'll move over to Whitehaven Coal. Stuart, what happened with Whitehaven yesterday?
Big development for Whitehaven Coal. And this is a company I've been a fan of for some time now. Whitehaven Coal is mostly a thermal coal story. They've got a number of coal mines in New South Wales. They just did a huge deal to take a couple of coal mines from BHP in the metallurgical coal space. And that's going to add a considerable amount of shareholder value, as I'll explain shortly. So first thing to know is coal's going to be with us for a while yet. And I used these in a webinar we did back in May to explain my thesis on coal. Basically, for thermal coal, look for peak coal coming probably maybe end of this decade. But the world will continue using a lot of thermal coal in the meantime. And the demand has been not bad in the last little while. So don't write off coal as a commodity just yet, because the world is necessarily going towards renewables. These things are in transition for us, and so a company like coal, whose bread and butter up till now has been thermal coal, is in reasonably good shape. The next slide, which shows the chart for Newcastle coal prices, that's mostly thermal, and as you can see, it's come off the peaks of early 2022, which were related to energy shortages generally around the world, and also a severe shortage of coal in China. The price has normalised, but it's stabilising there at about 150 tonne for the benchmark Newcastle coal contract. But the companies like Whitehaven can make good money at 150. So I'm expecting that you'll see the stock even stabilising without this deal. But with the deal I'm about to describe to you, it's going to a whole new level. So, who is Whitehaven Coal? 4 mines in the Gunnedah Basin of northwestern New South Wales, including the flagship, which is Maules Creek. Look at the September quarter; they were selling at $224 a tonne. Operating cost is a lot lower below that, shipping about 5 million tonnes a quarter, and cash from operations $250 million, even in a quarter that wasn't so good as the previous one. Now, this is the important thing. Whitehaven has a net cash position of $2.45 billion as at the end of the September quarter. So it doesn't even have to go and talk to banks if it needs to acquire something. It can just use its own continuing free cash flow, plus the enormous amount of cash that's built up. And Paul Flynn, one of the quiet achievers of the ASX 200, he's been running this thing since 2013. So he's had 10 years to strategize about how he's going to build a world-class coal company. So what just happened? BHP are a big player in the Bowen Basin in central Queensland with a lot of metallurgical coal mines. One of the really important mines they own is Blackwater. Relatively new mine was Daunia. Those mines are now going to Whitehaven, who will pay up to $4.1 billion. Now, there's only, I'm looking at the numbers here, only about 2.1 billion of that is up front. Then there's a deferred payment and maybe a little bit extra if coal goes to a certain level. And this deal is important because it takes the company out of the thermal coal sweet spot that it's in at the moment and gets them into metallurgical coal, to the point where 70% of their future revenues is going to come from selling coking coal to steel makers. And why is that important? We'll click to the next slide, and I'll explain that. So one of these days, Mark, you and I might even live to see it. The world might need thermal coal anymore. I suspect our great-grandchildren might eventually get to that moment if things are going where they will. The outlook for coking coal doesn't change all that much. And the reason is the world needs steel. And to make steel, you need coke and not the stuff from South America, but the coal derivative.
I was waiting for that one, Stuart.
Right. And the only way to get coke is from metallurgical coal. So in other words, you're on the right side of the coal space at this point. And BHP is selling super cheaply. They're selling out for just 2.9 times 2024 EBITDA just on the forecast prices. Use the current spot prices, which are still reasonably high, you get 1.8 times. So it's a giveaway. I've said it before and I'll say it again. BHP has gone a bit woke in recent years from the company my father was a lifetime employee of. They're getting out of the stuff that wokies don't like coal, and they're focusing on the stuff that is important for the energy transition, such as copper. Well, that's fine. They'll probably make good money out of doing that, but they're giving away the old less popular assets at bargain basement prices, and this is probably the best example of that to date. So highly accretive deal. Just looking at comparable coal companies, you can get at least 3 or 4 times EV to EBITDA on bang down multiples, and yet BHP is selling for less than that. So highly accretive deal, but not just highly accretive, but long lasting. Blackwater is a gigantic mine, and it's got a 50-year mine life associated with it. So Whitehaven will be making out like bandits on this deal for decades. as a result of that. Now so no surprises there. As soon as that deal got announced, the Whitehaven stock reacted strongly to it, and I think there's probably more where that came from. So long as prices stabilise and start holding their own, but possibly moving in the right direction again.
Right. So apart from wokeness, why did BHP sell so cheaply then?
Well, there's probably an issue where most acquirers of these assets would need to go to banks or find project financiers. And it doesn't matter whether it's met coal or thermal coal. Banks don't really like to be associated with either kind of coal, given the fact that even to get coke out of met coal, you're putting a bit of carbon into the atmosphere. So there was probably a paucity of potential buyers, and you needed cashed-up companies like Paul Flynn has managed to position Whitehaven to be. I think that's part of the reason why they're selling cheaply. The other thing is they probably wanted to move it off their balance sheet fairly quickly, and Whitehaven had the most credible deal. So put those two together, and that's why Whitehaven's managed to get such a great arrangement.
All right, good stuff. We'll leave it there. So to all Whitehaven and Weebit Nano shareholders, congratulations, and We'll see you next week.
See you next week.